Thursday, July 7th, 2022, Monaco 64, home of alternative economics and contrarian views. We're going to look today again at all the ingredients necessary for a crack-up boom or a hyperinflation or currency collapse. And we're going to look at the latest ingredient that I think is very important, the inversion of the U.S. Treasury yield curve. Before I start, though, I'd like to make a few announcements. First of all, today is Billy's birthday. Yes, Billy has been part of the channel for a long time. He's 14 today. We got Billy in September of 2008. He was about 8 weeks. And yes, the breeder couldn't sell him. And because at the time there was an economic crisis, a collapse. And we were lucky to get Billy. And we called him the credit crunch puppy. Anyway, another announcement. I made a video a few weeks ago because with all the industrial strikes going on, not only in the UK, but all over the world now, I thought it was important to let the trade unions or labor unions know that sound money is very important as well, part of the equation. Very few people talk about that. So someone recommended I design some products for my Teespring store. So I just received this AUAG wages only at Monaco 64. So I designed other items as well, like t-shirts, sweatshirts. So have a look in my Teespring store. It might be helpful. Who knows? I wouldn't hold my breath that trade unions would start looking into sound money. But weirder things have happened. So I'll just have a sip of my coffee before we move on to the crack-up boom or hyperinflation. And I've spoken about this many times before. For those of you who have been around with the channel for a while, you'll probably know this. But it's interesting that, in my opinion, it's evolving and it's worrying. But at the same time, you should be prepared, I hope. And yes, we talk a lot about gold and silver and having some of that, and that's important. But as I've spoken with people like Arpad from Star Path Academy and a YouTuber from Lebanon, there's a lot more than just having monetary reserves during a crack-up boom or a monetary collapse. You also need to have faith. You need to be well spiritually. You need to have friends in the community, help each other out, be nice to people. It's more than just like having the money to survive through it. Of course, it's very good to have those reserves. In the aftermath, you will be probably, hopefully, comfortable and be able to provide for your family and even maybe leave a legacy. So before I go into the yield curve, how it's inverted and what that means, I'm going to read here the definition of the crack-up boom by Ludwig von Mises. And this is taken from my book that's up there, Human Action. It's almost like a Bible, von Mises, Austrian School of Economics Bible, I would say. And this is what he says about the crack-up boom. But if once public opinion is convinced that the increase in the quantity of money will continue and never come to an end, and that consequently prices of all commodities and services will not cease to rise, everybody becomes eager to buy as much as possible and to restrict his cash holding to a minimum size. For under these circumstances, the regular costs incurred by holding cash are increased by the losses caused by the progressive fall in purchasing power. Does that sound familiar? The purchasing power, loss of purchasing power. The advantages of holding cash must be paid for by sacrifices, which are deemed unreasonably burdensome. This phenomenon was in the great European inflation of the 20s, called the flight into real goods, Flucht in die Sachwerte, or cracker boom, Katastrophenhause. The mathematical economists, the Keynesians, are at a loss to comprehend the causal relation between the increase in the quantity of money and what they call velocity of circulation. So that's the definition there. And yes, recently we've had a big correction in commodities: oil, gold, silver, and all the other general commodities. But we're also getting a lot of other ingredients of a cracker boom, and I highly recommend you read these two books here. One is called When Money Dies by Adam Ferguson. This is about the 1920s inflation that he talks about, or Weimar hyperinflation. It happened also in other countries in Central Europe, of course. And the other one is this one, Fiat Money Inflation in France by Andrew Dixon White. This is about the inflation during the 1790s, revolutionary France. This was written in 1912. He didn't call it a hyperinflation, but it was as good as. And this is where you'll see these symptoms that I've spoken about for many years, for the last 6 years. And let's go through them. One of them is a weak economy, and we have that, and we'll come to the inverted yield curve in a moment. The other one is a huge debt burden, usually occurring after a major war or major government spending. We have that in spades, don't we? I would say the 08 crisis and the 2020 crisis have truly built up that debt, but also the cyclical nature of the bond market in the last 40 years has helped indebt the whole world with the fall in yields that we've had since 1981. The other one that's happening in spades now, and many of you are probably aware of what's happening, so we'll go through the list. We've got all the division, political division in the United States. I don't have to tell you about that, what's going on there. We have in the Netherlands, which is a country that is usually associated with a public that's very tolerant, very rational, very calm. They've got almost like a war there now. Like the farmers are buying tanks to block warehouses where they're doing they're throwing spewing manure onto politicians' houses because they want to stop farmers from farming. They want to destroy 30% of their farms. And we had, even last year during lockdown, a lot of protests in Holland. Here in the UK, I don't have to tell you about it. There's a lot of division. There's mayhem, chaos in the government. We have a prime minister who has no support within his cabinet or his party, and he's holding on. And we don't have a very good alternative. In France, we have a president whose party is the minority in parliament. It's the first time, I think, in 50 years. What else? Germany, they have a very weak leader after having a very strong leader. And the list goes on. I mean, you look at what's happening also in Eastern Europe in terms of Ukraine and everything, and all the geopolitical mayhem going on, all the sanctions and the division also within world powers, like you have NATO and the global South. So yes, the other thing as well, people lose faith and confidence. They don't believe anything the government says anymore. And Boris Johnson, I guess, is a poster child for that. Even his colleagues in cabinet and in parliament are saying that he he's been economical with the truth. I don't want to use the L word. And also what's been going on in the last 2.5 years to do with this health crisis. Many people don't believe anything anymore. So how can you have faith and confidence in a currency or currencies that are managed by these same people, central bankers? They told us there was going to be no rising prices, and that's what they mean by inflation. And here we are, almost at double-digit rates. People don't trust them anymore. I mean, the markets are still giving the Federal Reserve the benefit of the doubt, but I think very soon that will be over. So all the ingredients are there. And the other important ingredient is that people, especially the Keynesian economists, and von Mises calls them the mathematical econometric economists, the PhD economists. They believe that in order to have rising prices, you need a strong economy. They think that this correction in commodities is going to be the cure for rising prices, but it's not. It's going to come back because it's all due to the creation of currency and credit out of thin air that we've had in spades since 2008 and even before that. So yes, to reiterate or to come back to my point here, yes, the Keynesians don't believe we can have like a high inflation or even currency collapse in a weak economy. But that's exactly when you get it. A weak economy means, yes, people lose faith in the currency. Producers lose faith in the currency. They stop producing. There's less supply of things. And people are trying to get rid of that currency as quickly as possible. They can't find things to get it, and when they do find it, they bid it up and the currency goes down in value, and pretty soon no one will want that currency. And it sounds extreme, but I've never been as certain in my life of something, and mainly because I've been studying this and preparing for it for about 20 years. And as many of you know as well, I know it's possible because I grew up in Brazil, and in the 80s, I witnessed that currency collapse. And one thing to finish off is that it's not the end of the world, that it's actually a good thing because it cleanses the system. I mean, here we have Billy. We got him in the depths of an economic collapse in 2008, and everything's fine. So there you go. The yield curve before I look at the markets. As you can see here, yesterday I took a screenshot of the yield curve, and you can see that the 2-year yield was up 18 basis points. So it finished basically at 3%, while the 10-year was at 293. So an inversion of about 7 basis points. And this is the first time it has definitively inverted since around 2019, early 2020. And I remember at the time people were saying, oh, this time is different, we're not going to have a recession. Lo and behold, look at the collapse we had in March 2020. I'm sure a lot of people are going to say the same thing now. But the reason why this is important, because financial institutions usually borrow in the short term because it's cheaper, and then they lend out into businesses, the economy, in the long term, so they make a profit. But if it costs them more to borrow in the short term than to lend in the long term, they're not going to be doing too much borrowing and lending, so the economy will naturally slow down. And of course, I don't have to tell you about the recent data. They've been very weak. And tomorrow, of course, non-farm payroll will be the key number. So with that, let's quickly look at where the markets are this morning. Yeah, Billy seems to be quite animated today. I'm not sure what's going on. I guess maybe he knows it's his birthday. I doubt it. But anyway, so it's just before 8 a.m. London time. We've got spot gold up about $5 at 17.44. Range has been 48 to 36. Silver's up 12 cents 0.2% at 1931. High has been 45, the low 08. The Dow futures up 65. NASDAQ is up 34. S&P up 8. FTSE is up 76 points. Eurostoxx 50 is up 50. To the currencies, sterling is up 0.25% at 119.53. The euro is up 0.2 at 102.01. The dollar is unchanged versus the yen, 135.87. Dollar is down slightly versus the Swiss franc at 96.97. And the dollar is unchanged versus the yuan at 6.71. Russian ruble, we're at 63.60. So the dollar is up a couple of percent. I guess, yes, the ruble has weakened in the last few days with the correction in commodities. Back to the other currencies then. We've got the Aussie dollar up 0.5% at 68.09. The dollar is down slightly versus the Canadian dollar, 130.23. And the Kiwi dollar is up 0.5% at 61.73. The general commodities, WTI crude is down 0.5% at 95.71. Brent crude is down 0.5% as well at 99 exactly. And high-grade copper is up just over 1% at 345. U.S. nat gas is up 0.5% at 552. And I just wanted to tell you about the Dutch nat gas futures contract on the ICE exchange. That's very important for Europe as well. That's at 177, which is I think a 2-year high almost, as you can see here. So natural gas in Europe is still very expensive. It used to be below 15 euros, I think. That's the currency it's denominated in. Below 15 prior to the 2020 crisis. And now we're trading almost at 200. So there you go. And just a quick look at where the 10-year yield is this morning. It's at 293. So it looks pretty much unchanged from the screenshot I took yesterday. The 2 years at 298, so still inverted. So there you go. If you enjoyed this video, make sure you hit the like button. Think about subscribing to my channel if you haven't yet. Make sure you also share this video far and wide. And with that, I wish you all a great day. Take care. Bye.